Imagine being up 54% on NIO, 35% on Alibaba, and 25% on Tesla. By the end of this video, not only will you know all the rules behind the entries and exits of this strategy, but also 5 stocks that are meeting the entry criteria for this strategy going into this week. To understand the entry criteria for this strategy, you will want your percent change indicator turned on, which is a default indicator in ThinkorSwim and in really any active trade software you may be using. And you can even change your high alert to 5 just to make it a little bit more visibly clear, because the entry criteria for this strategy is when the percent change is greater than 5 on 3 consecutive days. Now, what the percent change is measuring is the difference in closing price of the current candle versus 14 candles ago. So even though this stock is dipping right here, you will see because 14 candles ago, you got this massive drop down. That is why the percent change is going up. So here you get a percent change. If you can see this little number next to my head of 9.9, then you get 8.3, then you get 6.3. That is, of course, 3 days in a row where the percent change is greater than 5. So the strategy enters on the close of that third candle. There are 3 separate exit criteria for this strategy, and for each one, you will want your ATR indicator turned on. ATR stands for average true range. It measures the average difference between the high and low of each candle over the last 14 candles, and utilizing it for stop losses is a great way to include volatility in your capital preservation. And yes, I said stop losses on purpose because this is a continuation strategy. All 3 exit criteria are actually only getting out on stock weakness. We have no upside profit take. Because if you've noticed from the statistics of this strategy, the point is to generate much larger average wins than average losses. The point is to find strong stocks, enter them, and then let them continue to be strong for as long as possible. You are seeing all 3 exit criteria happening on this chart here, here, and here. And you'll notice each one gets out only on stock weakness, allowing that full strength to play out. Let's start with the loss criteria because sometimes it just happens. The stock is really strong, you enter, and then it just fails. If you've been trading for any amount of time, you know this is just going to happen sometimes, and having the correct stop loss set for your strategy to still be profitable is imperative. So, our stop loss is our entry price minus ATR times 1.5. So we enter this trade at the close of this candle at 197.60. The ATR at time of entrance is 4.2. I don't know the exact math on the top of my head. 4.2 times 1.5, something like 6.5, 7. So it should be about 6 points down. This is denoted by our salmon colored line here within my strategy that I have custom coded. I have coded these plots in to showcase my exits. We'll talk about this cyan line next, but the salmon colored line is our entry price stop loss. So once again, in at about 197.6. Our initial stop loss is at 191.27. So yeah, what's that? About 6, a little over 6 points. Like I said, this obviously adjusts with the ATR. Once again, a beautiful thing of using ATR as your stop loss is that the more volatile the stock is, the more room your stop loss is given to breathe. The less volatile a stock is, the tighter your stop loss is to protect more of that capital when having a wide stop loss isn't necessary. So you'll see this salmon line sort of adjusting as the ATR also goes up and down. When the ATR drops, this of course goes up. When the ATR goes up, this of course comes down. But anyway, when you get a candle that closes below this level, entry price minus ATR times 1.5. You get stopped out of your trade for a loss. Next, let's talk about the cyan line, which is our second exit criteria out of 3. This line represents the current bar closing price minus ATR times 2.5. So this is your large single red day drawdown kind of catch. So you don't end up getting screwed on a massive red day where you have to, hold all the way through, hold till close before you exit. If the price touches this line, you sell at the value of the line. So once again here, this bar previously closed at 176.65. Let me move myself over. The ATR on this day was 3.9. So 3.9 times 2.5. I don't know. What is that? Something like 10, 11. As this drops down 176, you'll see, the ATR or the cyan line the next day is at 166.6. So about 10 points down. When you get this sort of massive move down the next day, looks like some kind of news or something on Amazon here. As the price touched this level, the strategy exited at that level. Our third exit criteria, and honestly the one that happens the most often for locking in profit, is going back to our percent change indicator that we had on for our entrance criteria. If that is below -10, we also get stopped out of the trade. So you'll see here on the close of this bar, the percent change goes to -13, meaning just over the last 14 bars, the stock has dropped more than 10%. Hey, it hasn't made a large enough move down in a single day to kind of hit this ATR times 2.5 cyan line, but it's pulling back pretty good. The strength, we've let it played out. It's definitely sort of coming to an end now. Let's go ahead, get out of this trade, and lock in our profit. So once again, third exit criteria, percent change less than -10. If you're interested in this strategy, the share link along with over 55 other custom codes are all available on my website, daytradingstrategies.net. Click the link in the description down below and go check it out. I, of course, also have a screener built for this. You see it up here in the top left corner where it is scanning for stocks that have been above 5 on that percent change for 3 consecutive days, meeting our entry criteria. And now we're going to look at 5 stocks where that is true right now, where you are currently getting that entry criteria as true for the first time, rather than stocks where, like NIO, we ended up entering this stock a couple weeks ago. It's still on the scanner because the percent change is still over 5, but the strategy has been in already for a while. The first stock this is true on is IQ, India, Quebec. You can see here the percent change indicator value over the last 3 bars has been 17, 14, and then 36. That being these 3 bars in a row as this stock is ramping up, being greater than 5 on the percent change indicator, so the strategy entered. Now, the strategy actually entered at the close of the bar on Thursday, so the strategy's actually in from 268, and you already got a pretty nice push up over 316, but still hovering right around this price, still definitely one to watch going into this week. Next is Vail, Victor Alpha Lima Echo, another stock ramping hard, another stock where the percent change is greater than 5 over these last 3 bars, and another stock where the strategy has just recently thrown an entrance and we'll be keeping an eye on into this week. For stock number 3, we've got a big one. It's NVIDIA, November Victor Delta Alpha, obviously the stock that has been insane over the last couple of years. This has also just thrown an entrance on our continuation strategy, with the percent change over these 3 bars being 7, 13, and then 15. The strategy entered, and you're actually getting a bit of a dip right now. So you can get even a better entrance than the strategy. Next, and related within the semiconductor space, is MU, Michael Uniform. This is Micron Technologies, and this actually got its entrance at 95.79 on the strategy right before a huge gap up. There must have been some kind of news or something on this stock, but as you can see, these 3 bars previous, percent change here is at 5.6, then 5.2, then 7.13 on these 3 bars. So the strategy got in here. It looks weird because it says buy up here, but the buy, just because it runs on this candle, I have it set to buy the closing price of previous candle, because that's what you do with this strategy. You would run this scanner just 10-15 minutes before market close, and then you would buy into market close any stocks meeting the criteria. So you can see this little green arrow here signifying that the price entered was actually on the close of this bar. Remember, because over 5, over 5, over 5 entrance, massive gap up. So this stock did just enter the scanner. However, it is already kind of up a lot from the entrance, but still worth watching into the next week. Then our 5th stock is Mara, Mike Alpha, Romeo Alpha. I'll keep it simple. You all know the drill by now. Over 5, over 5, over 5. Bought the close at around 16.15. Actually already got a really nice bounce up over 18. Little pullback now though, so worth keeping an eye on. Now, before you get the idea to go run and buy any of these stocks that I just covered, I'm sure you all have already noticed up here in my backtest statistics of this strategy, this strategy loses more than it wins. On Tesla, it's got a 40% win rate, 39 even. And that's the typical win rate of this strategy, between 35 and 40%. It's going to lose most trades that it takes. The idea behind this strategy is that when it wins, it just wins so much larger than when it loses. I mean, look at this win on Tesla versus this loss and this loss, right? That's the point of this strategy. So don't go running and buying any of the stocks that I just listed because you think they're going to go up. They're actually more likely than not going to go up. It's just that when they do, the exit criteria of this strategy allows for much larger wins than losses. And remember, profit is a seesaw. It's not about just win percentage, and it's not about just risk reward. It's about measuring the two and balancing the two so that over time you are making money. Of course, once again, if you're interested in accessing the share link for this strategy or the scanner or any of my other codes, check out my website, daytradingstrategies.net. And those of you that make it to the end of my videos, I like to give you a little extra push. I always say you all are the ones most likely to make it. You all are the ones taking your trading education seriously. So you're going to get your first month for only $15. That's over 60 codes for $15, and you can cancel at any time under the My Account tab. So click the link in the description and become a better trader today.